Greetings, ladies and gentlemen, children of all ages. You're not going to believe it. It's time for another Equity Guru Investor Roundtable. I'm Rob in the basement along with Galen. He's over there. Vishal is up there in the gold vault. Chris living large in the far corner. We're talking about verses. We're doing a little addendum roundtable here. VERS on the NEO exchange. Gabriel Rene, who we've heard from on this site on a few occasions. Very interesting cat. It's a very interesting company. They've got some funding going on, Chris Perry, and you always do a very fine job of describing the technicalities in an efficient manner.
I'm not sure that that's true. So Versus is a spatial internet company is the best way to describe it. So, all right, let's give you one example. I've done this many times before, but we'll do another one. Let's say your Tesla leader wants to build a new factory out in Upper Kambukta West, New South Wales, Australia. But what thing you don't want to do is to just say, well, we're just going to do the same factory that we did in China. We'll just put it down there in the local area, because you're just assuming that everything's going to work the same, and it never does. One thing you don't want to do is make designs that you then put into practice before you find out they don't work properly. So what you might do is what's called a digital twin project, where you go and throw a bunch of sensors and cameras into your existing facility. You watch everything that happens. Then you put all the data that you gather into a system, and you create your new factory in the virtual environment, where you have one machine over here leading to another machine over there. There's a conveyor belt that goes over here. There's 3 guys working this. Hey, what if we had 5 guys working that? So we see what that would change data-wise. What if we move the conveyor belt from here to here? We'll see what that does data-wise, right? So you're building and rebuilding your facility maybe 1 million times using AI before you get to the place where you're like, you know what, this is exactly the best plan. Let's put it into production and spend our $1 billion. Now, this happens a lot more often than you would think. I know one of our client companies, AMPD, was working on a digital twin with Boeing for their new factory. And I've heard the technology mentioned many, many times in a lot of tech companies that are really hot right now. So Versus takes that activity, but it also spreads it out from, that one-off environment where you're building something new to existing environments. So let's set up cameras all over your warehouse that's sending products all over the USA, all over the world, and has maybe 125,000 SKUs. And let's start moving things around in the spatial environment and see if we can't make things a little bit better. Let's save 7% on the time it takes to get a product out. Let's use 15% less people to do it. Let's find out how we can get this thing working to a way that makes the most sense. Or if there's a problem somewhere else in the chain, how's that going to reflect on what we actually have coming up? So that's in a nutshell. What I love about Versus right now is they went out looking for $10 million in financing a month after going from, 28 cents to $1. They went and they said, give us $10 million. And not only did they get $10 million, but they got more. So they went out and said, actually, we're going to take 12.5. And then they took that extra 2.5, but it kept coming. And so eventually they settled in at, look, 14 million, stop it now. Stop throwing money at us. We don't want any more money thrown our way. That's kind of in a down market, when half the people out there still don't understand the technology, to be getting that much cash thrown at you by presumably big investors means that these guys are now cashed up so that they can scale up. And if you look through their news releases, the level of partner that they're doing business with, that they're announcing that they're actually working with, is up here. It's not a little bit here, and we hope we can get some meetings with these guys and these guys. They're starting up here. These guys are making deals with companies that don't open the door for you unless they know who you are going in, know what you've done going in, and trust that they can not only use your tech, but integrate your tech into their existing systems. For most normies out there in the meat space, that takes years. And you have to work it up from the little deals to the little deals to the bigger deals to the big deals. These guys are starting at that top point. That's why the money is being thrown at them this is a interesting deal. The more you read about it, the more you watch Gabriel Rene talking about it, go to their investor relations site, see the video explainers. Uh, it's it's a real interesting deal.
And I always transition to Galen as it relates to Gabriel Rene and other CEOs because he has firsthand conversations with them on a frequent basis when we're setting up our Maddies and our Jodies and our Chris's. And I know you feel pretty impressed about this guy, Galen.
Well, the management group is highly trained and have deep expertise within that area. It's like a collection of white paper writers. These are the people that will build the foundation for spatial web and for the contextual computing era. And what Chris has described in terms of the digital twin, that in and of itself is the contextual computing era. So we take data from everything in a live space, take it digital, repeat it online, and then be able to output it back to the live space at any one moment and have actionable data. And also have that system, which is AI-based, make decisions based on that data. So you automate supply chains. You are able to manage them all the way from point A to point Z. You don't have to worry about something breaking down like a broken telephone, which is pretty well what happens now, unless somebody picks up the phone and goes, "Hey, bud, we don't have Wachicot's point C to get to you by next week. You're going to have to make some changes on how you're doing your assembly or your manufacturing." Now it senses that, and not only can it sense it when it's happening in real time, because it is gathering all of this data, it can actually preemptively sense something is going to happen. This is the wonder of what we're beginning to see, and these guys are at the base of it, basically. Now, as Chris mentioned, they've made some pretty formative partnerships. One's with Tompkins Ventures, which is a global leading supply chain management consultancy firm. This puts them in the eyes and in the living rooms, I guess you could say, of all the big companies that need to get their systems put into the 21st century, because basically that's where we're at right now. We're at a conversion point. To use a tired phrase, we're transitioning to Web 3.0. I hate the term. It's been overused and misused, but we're at a transitional point between one way of doing a business and the next stage of doing the business. And these guys are the facilitators of that transition. They've also become a member of the Digital Twin Consortium, which is an international group that puts all of these people together, be it the experts in the industries that require the services, to government agencies, to the companies that are providing it. And Versus has become a formative partner, I guess you could say, within this coalition. And that's a very important, again, move for them. Now, on top of just sort of getting themselves in the business, they've also, as Chris had mentioned, are making some pretty good deals, and just announced recently that they'd expanded the use of their, or the deployment of their I'm going to say groundbreaking because it increases productivity by about 40%. It's called the Wayfinder app, and it's an AI-based warehouse picking software optimizer. Basically what it does is it takes a digital twin of the space that you're working in the warehouse. It knows where everything is at. It knows where everybody's at. It knows where they're going. This includes automated devices, not just humans, and guides them on the optimal route to pick their stuff without bumping into somebody else and doing it at an optimal rate. So, as I said, increasing productivity by 30 to 40%. Now that's a pretty amazing step up. So this company expanded their deployment with NRI, which is again, a North American leading e-commerce fulfillment center with facilities all over the place, and they love what they see. They've seen the pilot program, they've taken a small offering, and now they want it all. So this is just a good indication of where Versus is actually heading. Now, if you want to take a look at share price, this company has more than doubled it since they've IPO'd. And that's not something that's entirely common considering today's public markets and how IPOs work. Because usually it comes in high, goes low, and then maybe if you're lucky, it'll repeat it somewhere down the line. Right now, we've got something that's on a very definite upward trend, and not necessarily a hockey stick, but we're talking a good incline. This is a good company.
Mm-hmm. Not Galen, Michelle's terms of our addendum.
Right.
Little quickie look at the charts and your
For
thoughts.
sure. Yeah, yeah. And, Chris and Galen have both mentioned this, and we've mentioned this in the past, but it was probably, if not the hottest, tech IPO in the Canadian markets. Big jump up. We saw the opening price around or just under 40 cents, taking us to all-time highs, hitting $1.10. Always mention that dollar level, is very important for these types of stocks. And you can see in the past few weeks here, beginning on July 22nd, the stock, attempted to climb and break above $1.05. And I have drawn my price ceiling or resistance level here at $1.05. You can see all these candle wicks just attempting to break above, but we just could not do that. And just recently here on August 18th and 19th, we tried once more to get above $1.05, but we couldn't confirm a close above $1.05. So I personally think, just like, looking at the technicals, maybe we're going to be seeing some profit taking here. Obviously, we have some really good news with the company now having some cash, and obviously they're going to employ that to create some more catalysts for shareholders. But just judging by what we're seeing on the markets in general, perhaps people are taking profits, and I don't think you can really fault them. When you get a move like this, maybe some people jumped in quite early here, or joined when the stock stalled here at 70 cents and rode this second wave higher. But to me, it looks like with this close now below 95, we could be seeing a bit of a retracement or a pullback in the stock, but it provides a good buying opportunity for people who missed out on this large move higher. And you can see, there hasn't actually been much of a pullback ever since the IPO. So I think there might be some people, obviously taking profits, but on the other side of things, I think there are a lot of traders or investors, that might be waiting or have been waiting for a bit of a pullback here to jump in to the stock because they didn't really want to catch this big wave up, or they missed that entire wave higher. So short term or medium term, there could be a bit of a pullback here, but I think it's going to be positive for those wanting to jump into the stock and holding this for the long term.
I'm going to say there's not going to be a pullback. That's my opinion. So this thing stopped climbing when it started its financing.
Right, yeah.
At $1, right? And you see that chart over the last month has had $1 ceiling on it.
Exactly.
The reason why someone would sell stock at 93 cents and buy $1 financing is you get your warrant. So there's your extra money if things keep going up. $14 million worth of what would have been otherwise buying or holding has been moved into that private placement. Now the foot is off the neck. The financing's closed. Now there's a chance for this thing to actually move above $1 again. And I'd suggest to you that if that financing had never happened, I would imagine we'd be seeing about $1.30, $1.40 at this point. To me, we've already done an investor roundtable on this before, and we said way earlier in the story that you should be putting your money on it. I still think that maintains right now. Rob, I'd be taking your $7,500 and I'd be slapping it right in there for 7,500 shares.
Ooh.
I think this thing, economy notwithstanding, I think there's good news coming ahead. And when the good news drops, if they can attach dollar figures to it, there's a lot of people that are taking this ride right now. And I tell you, as a client of Research Capital, formerly Mackie, the number of brokers that I heard from saying, hey, you want in on this versus deal? It's kind of going nuts. I think that, when you see everybody else taking the gamble that this thing is at a bottom at $1, you follow that big money.
Right. Galen, how much?
7,500.
Wow.
And this is not necessarily, it's a shorter term payback as far as I'm concerned, but it is a long-term hold. This is not buy today and then sell 5 months from now. This is buy today and get my retirement savings happening again. So that's what I'm doing.
Okay, that's two.
Get the channel ready. I did say 7,500 before in previous roundtables, and I'm sticking with that number. So 7,500. Again, I like the technology and the long-term implications of Wayfinder and Cosm. That big app there. So 7,500.
500 times 3. That part.
What's important to know about this is that they've built the technology, they've built the software, the hardware, and they can implement it without having to open another 1,000 people on a support desk, right? This isn't a thing where every time you get 1,000 new instances of your product, you've got to go out there and expand your sales group and your customer service group, and they build it, they get a piece of what they're built, and they move on to the next thing they build with the same technology. So this is the early days where the cost of doing business probably matches the revenue that comes from doing business, but those two lines begin to separate over time. And I think once we see that coming into financial statements, it's going to be a behemoth.
Right. We're talking about VERSES. That's VERSES, the company, and the symbol VERS on the NEO exchange in Canada. Gabriel Rene is the man in charge, and you just heard the reasons why you might want to invest in it. Can't guarantee anything, nor do past performance guarantee future results, but please check it out. Do your homework. Go to their site, VERSES.io.
Go to the investor relations page and look at the video that the CEO did. It's 25 minutes of your life, but it will be very important part of it.
Right. And you can check out more of the material right here on the Equity.Guru site as well. Chris in the corner, Michelle upstairs in the gold mine, and the man in the basement over there, Galen with me, slumming it. We'll see you on the next Equity Guru Investor Roundtable.
Why does he always